Good morning, everybody. Welcome to the Flow Show. Nearly at the end of the week, Thursday, 10th of July, and fairly quiet morning thus far in markets. We've got a few moves to look at. Morning, Kay. How are you holding up?
Morning, Ryan. Yeah, there's a very big echo in markets when we shout, right? The noise comes straight back. It is so quiet. But let's say those are the times where we prepare for when it starts to move again.
Yep, exactly. Right, just before we get started, just want to remind you that if you haven't already, stick your name in the boxes there, subscribe to our newsletter to find out what's coming up, and also get on the list for some bonuses and prizes and other benefits that you can get as we head towards our new launch. So don't forget to miss out on that, or don't miss out on that, I should say. Right, let's go. China, apparently, according to state media report, they're likely to ramp up their fiscal support for the economy in the second half of the year. The stuff they've done so far, not exactly getting things moving as they would like. So we could be getting some other kitchen sinks thrown at the economy in the second half of this year. Had a bit of data out. Oh, again, I've not got my calendar ready. Boom, boom, boom. There we go. A bit of PPI data out of Japan, coming in as expected year on year 2.9%, which is a drop from a high revised 3.3%. PPI data can be a bit more volatile than CPI data, but we're still running up and around that 3% mark, so nothing too much of note from that. We've had the latest regional bank branch reports. It's a bit like the US Beige Book, if you like, but in Japan, from regional Bank of Japan branches. The Osaka branch manager said there's no big impact from US tariffs seen in their part of the economy for now. The Nagoya branch manager says exports and output in the region have been increasing as a trend. They said some firms say they are putting off capex plans. The Fukuoka branch manager said some firms in their southern region are shifting auto production to the US instead of exporting from Japan. This is something that's been spoken about already, doing a little shift around on to get around tariffs. Also said some firms, auto firms, are lowering export prices to swallow the higher cost from US tariffs. So lots of tinkering going on there to offset these tariffs. Discussions still ongoing for trade stuff between those two guys. We had Norway CPI out today. We also got some final numbers out of Germany and elsewhere. Nothing to write home about, but Norway CPI, the year-to-date number, core CPI coming in a bit hotter at 3.1%. Headline CPI coming in unchanged at 3%, was expected to rise. Norges expecting maybe one or two more cuts this year. But Kay, does that CPI maybe keep them on their hands for a little bit?
They are at 4.25%, if I'm not mistaken, the last meeting. If you want to stay positive, real rates, yeah, you keep it there. I don't think this number will greatly change them because they already, yeah, they're still a bit above there. Of course, everybody would like it closer to 2%. That's like the global target zone for a lot of central banks. Is it changing their approach right now? I would say August pause perhaps also, but I don't think it's changing a lot. I mean, like a lot of them, they are a bit on in wait and see right now, and I guess this kind of number we have seen quite of those CPI numbers, quite a few of those CPI numbers coming in a little hot in June, and then Yeah, the next month is going to have to be monitored again, whether this stickiness or slight rise is going to be kept. June is the end of Q2. Let's see what Q3 brings. In short, I don't think they will change their view with such a number. Not a one-off spike. I think it's kind of in the cards or expected.
Yeah, thanks, mate. BOE's Bailey, he was talking on that financial stability stuff yesterday, but one comment that could be brought forward to current monetary policy stuff says that the global steepening of bond curves will have to be looked at carefully in their annual QT decision. Meanwhile, at the Office of No Statistics, that's the UK Stats Office, who can't get anything out at the moment, they gave us an update on when they might have PPI data ready for us again. That's the stuff they stopped in March because they couldn't get that right either. October is the date they hope to be able to produce some inflationary data. Only 3 months to go, 6 months without data. Who cares about data? Anyway, those clowns are trying to get their act together still. ECB's De Guindos maybe starting to get a little bit antsy about the euro. He says, let's hope the exchange rate stabilises and doesn't have any additional negative impacts. Good luck with that one. You've let the genie out of the bottle and you ain't going to get it back in again. ECB's Nagel, ECB should neither plan nor rule out further cuts. Hawkey Holtzman, he says there's no reason for further rate cuts. Just an FYI, he's departing in August. He is one of the biggest hawks on the ECB board, so we need to see who's coming into his shoes. Victor Vilroy, no laughing, please. He says he still expects French GDP to grow 0.6% this year. I'm saving that one for later. I might pin it on my wall, see what they produce this year. We've also had Fed minutes out. As usual, we know most of what was in it. But just to point out some things that some Fed members still saw a reduction in Fed rates this year as appropriate. And can you guess? A couple of participants noted they would be open to considering a rate cut as soon as the July meeting if the data evolved as they expected. I wonder who they were. Other participants said that the most likely appropriate path would involve no rate cuts in 2025. Mr. Hassett, Kevin Hassett, who got touted as a front runner for the Fed job, said he was humbled to be mentioned as a possible Fed chair nomination. Didn't add anything much to that, so he's not turning it down. Trade stuff. The EU Commission was hoping or is hoping to reach a trade deal before the 1st of August, and that might happen in the coming days. Then we got Trade Commissioner Šefčovič out, saying that trade talks are continuing remotely every day with the US, saying we made a good progress on the text of an agreement in principle. Hope to reach a satisfactory result in the coming days. So despite going through the deadline that's not a deadline, there's still ongoing negotiations, and we need to know what happens with the Eurozone, whether they cobble an agreement to agree to something later, or whether we get something more substantial. Despite everyone saying that Bessent was not going to be speaking about trade when he hops over to Japan for the Expo, Minister Akazawa is apparently arranging talks with Bessent at the Expo, according to Yomiuri. As I said yesterday, there's a fat chance they're not going to be speaking about trade. Trump threatening BRICS, any countries that align with the anti-American policies of the BRICS nations will be charged an additional 10% tariff. He went to town on Brazil as well, 50% for those and all other bits and bobs. And there's been a news report, shall we say, that these Amazon Prime sales have fallen 41% in the first day of the 4-day event. Now, mentioned that other reports expecting a big jump in these sales. Now, this is a report that came from a firm who does a lot of selling or facilitates a lot of selling on Amazon. So they're they're using their numbers. It's not the whole of Amazon sales that's being reported there, just their numbers. They're seeing a 41% drop. So bit of a pinch of salt on that one. Kay, got any comments or anything? I'm at the end of the news and there's not much
Um,
to talk about.
yeah, I mean, in general, well, Akazawa is probably going to arrange.
You'll be waiting at the airport, mate. Don't worry about that.
But it
Oh,
is
I've lost you.
now I'm back. I think I should be back.
Yeah.
Okay. Yeah, he's probably going to arrange a tea ceremony for Besant. But no,
No, you gone again.
I'm very sorry, but I don't know what's causing this. To be honest, I'm gonna have to recheck my whole microphone setup. Yeah, interesting in the news those lowering of the tariffs for auto exports. Planning more auto plants in the US. That's not going to help to for the Bank of Japan to raise rates again. This is more deflationary than anything else. That is one thing that I heard, and as we expected. I mean, the FOMC minutes just move on. We know that Bonnie and Clyde they want to. Oh, Bowman and Waller they want to lower the rates in July, just to have a chance to get onto the onto Powell's seat. Yeah, and it seems that Sivkovic and von der Leyen saved Trump at least one piece of paper not to have to write a letter. So euro is doing okay-ish versus dollar on the crosses. Not a lot is moving. This market seems pretty much. Is it fatigue of news, or is it just that the main money managers, money movers, have already started their holidays?
Yeah, as of the rest of them. It's going to be interesting. We know we're not likely to get any action at the July FOMC, but
Mm.
if Bowman and Waller are going to stand by their comments, then they should actually be dissenters at the next meeting.
Yeah,
They voted for the policy action of staying unchanged at the last meeting, so they should be dissenters voting for cuts, although
mm.
they've both given themselves the caveat, as noted in the minutes, that they will consider a cut if the data evolves as expected. So they got a little bit of a get out, but July will be the time they put their money where the mouth is, wouldn't it?
Yeah, they should at least. And yeah, as we know, Bowman moved from the hawkish side to the dovish side without passing through start. Who else can we expect there to be one of the voters? Cook, a bit of a dove, perhaps or so.
Yeah, maybe. But that's actually, just thinking about it now, that's actually the risk, the price risk to the meeting. It's not whether they cut rates or not. It's
Yeah,
we know the clear doves, Bowman and Waller. It's whether anyone else pops up
yeah.
that might be a bit of a surprise
You
to
know,
market making.
Goolsby is a voter.
Yeah,
No,
he's a lottery.
you know what, Ryan? I think there's a couple to watch there. I think Williams, he's going to have a voice there. If he suddenly changes tack, that may have a bit of an impact. I'm not saying that means that they are cutting, um, but we may have a few getting all of a sudden more vocal, right?
Yeah, yeah, that's what I mean. I think the real price risk or the market risk is going to be if anyone else joins those two.
Yeah, because
Um,
that's going to open the door wide open to the
yeah,
anticipation for a rate cut next time.
exactly. And I don't know if the market's ready for that at this stage. So it will be, because now we've spoken about it on the Flow Show. Everyone's going to know about it. But there you go, an early heads up of that's our FOMC preview. There you go, 2 weeks before it happens. Right, what else? Anything else, mate?
Not that I've seen. It's been very very quiet on whatever market movers are. Yeah, as I said, maybe dollar a bit on the defensive versus those who haven't received the letter, and then for the rest, it's very quiet. very quiet.
Yeah, I don't know what we'll do for the rest of the show. Maybe get the cards out. Anyone want to go bingo? We'll have a bit of Forex Flow bingo while we're waiting for Zane to do. But no, anyone wants to ask anything in the comments, do so now while we have a little mooch. I don't even know what's out today. Not a lot, I don't think. Jobless claims.
Yeah.
A couple of Mr. Waller's out later on, and Daly and Breeden from the Bank of England. So we've got a couple of speakers to keep an eye on later. Maybe they'll nail their colours to the mast, particularly Daly.
Daly is also one that could easily slip into a bit more dovish, slightly more to the dovish side, maybe.
Yeah. So
would be very interesting if some of those people outside Bowman and Waller would get more vocal. But I mean, Foolsby, he's just a weather vane. He doesn't know whether it's Tuesday or February. But it's I mean, is the market going to listen to him? I don't know. But the others may have a bit of a just pushing the market to lean towards something more dovish, perhaps.
Yeah. Right, I want to start off with dollar MEX because a little bit of a lesson in psychology. Let's call it a sort of lesson in psychology. This is when we talk about levels, talk about trading. It's always easy to say, this is a good level because you can see the history. The hard part of trading is deciding what to do with something in the moment. Okay, so everyone knows I'm short. I've got orders in to take profit on my short at 18.55 and start building a bit of a long. So yesterday, I'm watching this down here. We're getting down. We're under this 57. We're in the 55s. We're trading now. We got to a low of 55.05 according to my platform. Obviously, with spread differences, that's 55, 40, 50. So I'm sitting here watching it. What do I do? Do I leave it to my order? Do I go manual? And you're in that position where I'm trying not to be a dick for a tick because my level's 18.50. That's why I'm trying to do stuff at 55 because I'm thinking, all right, I'm going to trade ahead of the real level, as I like to do and tell you guys to do. So this is one of the moments where now I'm thinking, oh, bollocks, I've missed it because now we're back up in the 60s and did I have a chance to enact my trade? A little bit worse off, 30, 40 pips, which in dollar MEX isn't a big deal. Or now what do I do now? And this is where you, as a trader, when you're in the moment, you have those little questions. You start thinking, do I change my plan? Do I tinker with it? What do I do? And it's something you have to be careful of because you can't change your plan too vastly, okay? Because that's when you start changing the whole plan. Okay, so yeah, I might have missed it with this. If this is the low forever, then I might be gutted. But otherwise, I had the decision to make. I didn't make a decision, and now I've got to live with that decision. So what do I do now with my plan? If we come back down here to 55, does that mean we're going to go break through it because this move is still seeing lower lows and lower highs, and there's no reason why that should change? So now I can think, well, if we go back to 55, we might go through it. So maybe I won't take profit. Maybe I'll try and take profit at 50 instead and try and build along from 50, save myself some pips, get in better levels. So there's always a psychological thing when you're watching a trade live, what you want to do with it. What I'm probably going to do is just leave it. I've had my plan in, do stuff at 55. Yes, if I see 55.5, I might hit it because it's not going to make any difference. But I'm going to keep my plan the same because that was my plan from the start. And I'm not going to change it massively because if I do that, maybe I just mess the whole thing up and I end up buying it at 60 and then it goes all the way to 50 and all that sort of thing. So I'm just trying to give you a little bit of insight. We've all been doing this a long time, me, Kane, whatever, but you still have those moments where you can plan for something, but live watching a trade, second by second, minute by minute, you get those little thoughts in your head. Should I do this? Should I do that? Should I do the other? So that's where I'm at with this one. If I see this 57 level holding again, that might indicate we got a bit of a short-term bottom forming, and then again I might need to adjust my trade. We've not had something like that for quite some time. You know, back here we had that, and then we got a little or a decent move higher. This is a little bit less time, but it could build into something. So I still need to watch the trade, still need to manage the trade. But as I say, sometimes when you're in the moment, it's very difficult to make a decision. So yeah, don't want to be chickened out of a trade, Mike, but you've got to take regard and then respect the price action that's going on. So I just wanted to say, as I say, just give you a little insight. We all go through those little moments of indecision because, you know, we can't trade with hindsight. We have to trade in the moment, the right now, and that becomes a difficult thing to do. Kate, what are you dibbling around in this one?
I've changed my plan and I went flat for now because we couldn't. My original bid was at 52, sliced a bit yesterday, and then today I just said like, well, I mean, solid. I mean, why wait for another 0.5%, which may not come right now? So I just went out of mine this morning, but I already regret it, to be honest. I'm really thinking of giving 100 pips or so to the market and just re-enter, because I don't know what that little bounce was this morning up to 66, 67. I haven't seen anything in the headlines. I think we're still in that phase where everybody knows 1850 is a level. And if you're being short, whether it is for the funding or the carry or just both carry and direction, which was pretty cool for quite a while. People tempted to take profits ahead of the level, and but I'm still half in the mind that if we get to 1850, it's not going to stop there, but straight away crash through it to 1820 or so. Still flirting with that idea. For the time being, I'm flat, but may not remain flat for very long. I'm just going to perhaps wait for what the US will do when they enter, but I can see myself re-entering pretty swiftly. Not really for the pips day to day, but it's just that the problem is that if it hangs around here for a long time, it's going to suck people into longs, because they say like, oh, we are protected by the 1850, and that's where it's going to crash through. You know, that's what I'm kind of thinking about, because we know both Mexico and Canada. Canada is Canadian dollar is a different animal. It doesn't enjoy 8% interest rates either. But yeah, they both have a bit of time, I guess. Unless we get a surprise and Trump says, "Well, okay, we're not only going to build the wall, but we close it." In that case, you're going to have a bit of a shocker in the dollar mix, where we always need to work with stop losses. I always put stop losses in there. But yeah, I'm thinking, why did I even buy it back? You know, because it's just not going anywhere. And especially as we've been talking about so often on the dollar mix, it's still an emerging market currency. It has high interest rates. It has a higher volatility than something like euro dollar, for instance. So and I don't see why people thinking that, oh yeah, we are in a reversal here, because all the spikes that we see have been sold into so far again. So I don't think the bigger picture has changed for I don't think at all, you know, right now.
Yeah.
Yeah, that's about where I am at now.
Yeah. So Mike asks, how do you handle emotions? Well, look at this situation. So I've not acted on something and I'm feeling a bit regretful or possibly regretful. Kay's acted as he wanted to do, and he's feeling a bit regretful. So we've both done the opposite of each other, and we're both feeling a bit regretful. So how do you deal with that emotion? Well, first and foremost, you've made that decision. Okay, I made my decision. Kay made his decision. And while we say we feel regretful, there's a huge part of us that isn't emotional about it. We made the decision we did, and we're happy to live with that decision, because you can't sit on it. You can't dwell on those sort of decisions. You make a decision in trading, that's it. You have to accept it. And the same for emotions generally. Okay, you can handle emotions if you have a plan. If you have a plan before you enter a trade, you know what you're doing, you know your risk, you know what you're prepared to lose, then there should be no emotion. When you press that button, there should be no emotion because that's your plan. You know how much you're going to lose. You should be happy, not happy, but you should be comfortable that you know that that's your risk and that's what you could lose. And then that takes the emotion out of it because it's not a shock if it happens. You don't want it to happen, but it's not a shock because you planned for it. So that's how you take the emotion out of trading. There is no emotion when I enter a trade because I have a plan and the trade itself is just pushing a button. Okay. The emotion part comes before you do the trade. Am I happy with what I'm going to risk on this trade? Am I happy to lose that money if it goes wrong? And if the answer is yes, there's no emotion. If the answer is no, then you're emotional and maybe you're going too big a risk or you're not ready for it. And that then adds even more emotional pressure. So you've got to be happy with your decision before you make it. What do you say about that, Kay?
Yeah, absolutely. And mainly
Oh, you gone?
again. Am I back? I said
Yeah, yeah.
Meng Lim, that's the line of the day, really, of many days. Every time I start to pray, it means I'm trading really wrong. I mean, yeah, I mean, we've all been there. It's very funny, but to come back to what we say, and Ali, Ryan and I have absolutely no problems to sometimes be in opposite trades because we analyze things, we see things, but that doesn't mean that we agree on things. So that's perfectly okay. We can be in at different levels. Like Ryan, just to give you an example, Ryan can be, I don't know, long euro dollar at 117.10, and I'm short at 117.60, and we both make money. That's possible. We can both even lose money if we go to the stop loss of the first one and then hit the stop loss of the other one. But that's just because we have been in markets for quite a while. It's perfectly okay. People don't look at the same things all the time, especially not when it comes to charts or whatever. We can have different levels. I'm with Ryan and I, we've noticed already several times that we have different levels on different pairs. There are levels where we completely agree upon, and then we will see how the fundamentals line up. And then when we get into the same position, like we have been running that dollar mix for ages, then we also feel a bit more confident, perhaps because somebody who is looking at the same things come to the same conclusion, and that is comforting. But we absolutely have no issues being in opposite positions. Depends the reasons that they are. The main thing is the discipline. Once you go into a position, know what you want to risk, and the market will decide for you basically from there. So yeah, I have absolutely no issues with losing money for as long as I don't start to change my stop losses unless it's warranted by new events in the market. The thing is, when you have a position, you check, and that's where sometimes we change plans. You check if there's anything changing. Now, for instance, there is one where we can actually talk about now, because yesterday, even though those reports are very much back looking, but yesterday came out the report from the IMF on the central bank reserves in Q1. And it's Q1, so it is back looking, okay? But it was like this one little line because we are wondering, and I'm actually long Euro Swiss, and we are wondering why this Euro Swiss is just not going higher. Risk is higher, data in Switzerland are worse. There is a potential for a deal in the EU and US. Everything is kind of lining up for the Euro Swiss to trade higher. And the SMB somewhere doesn't like it, and the Swiss corporates don't like it. But the Swiss was still strengthening. Well, we have a part of our answer there. And even if we're talking about very small amounts, The Swiss part in the FX reserves of central banks has increased from 0.2 to 0.8% in 1 quarter. It's not so much the percentage, but they just quadrupled their holdings of Swiss franc, and that has a bit of a, if not a fundamental reason, but a psychological effect on the market. And straight away, Euro Swiss was a bit more heavy yesterday, and they probably added a fair bit to it in Q2 when we look at the weight on all Swiss pairs. But does that make me change my plan? My plan was, okay, I'm long because this is fundamentally right. But if we start to break below really decisively below 92.90, which is now a triple bottom because we went very close to it overnight, well, then I'm out, and that's okay because I've been in a long position. I did actually scale it back. I don't know when, day before yesterday or so, when we failed to rally above 93.65-ish again, because everything was there to do and it didn't. So I scaled back a little bit. So my risk is even a bit smaller, but I'm okay if I get stopped out at 92.80 because that was the start of my plan, and my plan is still running. So um, that on the emotional side of things, something may have changed, but it also could be that those central banks now are done with increasing their thing, and we start to trade back fundamentals, and then we're going to gradually start to move higher. I don't know when, but the fundamentals tell me that that should be my position. But I'm okay if I'm wrong. I just need to know where I'm wrong and what I want to risk. So the emotion for me, even though we joke about it in our chat room about being wrong in the Swiss because there's a few of us in the position, but we know what we want to risk, and we are going to be perfectly okay with it because on the rest of the other currency pairs we are making quite a bit of money, so that's all okay. That for the emotional side of things.
Yeah, and it's even okay. Well, it's even okay if K's got his stop at 92.80 and he gets stopped out, and the low hits 92.75 and then bounces up through 93. That's you've got to draw your line somewhere. It's when you don't have a stop and you go, oh well, yeah, I would stop at 92.80 and it's now trading 92.75. I won't stop it, and then it's 92.70 and then it's 92.60, and all of a sudden you're 30 pips below where you would have got stopped out, and now you're doing extra money. So
And then you
shit happens. You can
Yeah,
get
and then you're probably going to stop below the low of that we saw in April, somewhere there.
yeah
It's going to cost you a bomb more, and then you can be dead sure that's where it bounces from.
yeah, or you're going to do the even worse thing and double up and keep buying it as it keeps dipping through where you would have stopped out originally, and getting yourself in a bigger mess. So yeah, shit happens. You can get stopped out for a pip, and it can be the low or high of the day, and then it goes your way, and you're out the trade. That's tough luck, and that's what happens. And you've got to. It's another thing you just have to accept in trading. You've got to draw your line somewhere. But if you find you're getting ticked on your stops a lot, then you need to adjust your strategy. You need to pause and think, well, why am I getting stopped a lot on these levels, and it's only pinging through by a pip and then reversing? You'd have to maybe make an adjustment to your own strategy. But anyway, right, let's move on. I'm looking at the clock quickly. What else shall we talk about? Anything? Let's look at dollar yen, because here I am. I got pinged out on my trailing stop on this one at 146.20. I was in a trade 145.89 when we got those Japan trade headlines the other day. Managed to run it up to there, pretty much up to 147. Then we had a bit of one-way traffic all the way down. So this one was just basically getting sold all day yesterday, and then we had a sort of last hurrah in Asia. We hit this 145.75.7 level, which is just a minor one, but it's building up into something. It's not something I put my house on, but it looks like it seemed a decent stretch point for the moves, and we've bounced from there. We were hitting this 146. Let me zoom in a bit, make it a bit clearer. There we go. We were hitting this 146.30 level as a bit of support. And then we found resistance up there, and then we got the break. Now we've got this resistance again, 146.50. That's confirmed again today. This 30 level is a bit washed out now. We can't hold it, so that would suggest that maybe we're going to see another downside move, maybe down to that 145, 75, 80 level again. If we can't get back above here, then we ain't going back up to there. And it's a similar story, euro dollar. We had this confirmed support in the 116.80s, very solid. We've had several cracks at that level. It held, but now we find resistance again at this 117.50 level, which was a big level that a lot of people were looking at originally when we were coming up here. And we held, then we broke, then it was support, not for long, then we've faffed around a bit, but now it's resistance again. So you've got a bit of a range between there and the 80s. Take your cues from which way this goes, or if you're that way inclined, just trade in between the range. You try your bids on there and you try your offers into there, but it's going to need a break either way to get the next direction. Kay, what do you think this is going to do on if we get euro trade news? I think it's just going to be an agreement to continue talking, maybe some working towards some outcomes, a bit like the UK deal, as opposed to a full deal. How's the market going to take that?
In current context, Ryan, I think it may be slightly positive euro, because on the other hand, it could be positive US as well, because they are striking deals, right? So as I said already, it all depends what the details would be or could be. If it's just the structure of a deal, depending on the details we get, could be just good for both, and euro dollar hang around here. I thought, but it's like a very small step. Not sending a letter would see the euro do a bit better, but I mean the only effect was about 15-20 pips that we got out of it. I guess it's going to perhaps hold up euro dollar in a way, because the euro could do a bit better on the cross side. But really, it's just because we've seen US. Okay, there's still letters going out, but we've seen US striking a few deals here and there. Yet the euro dollar is still to respond to it. Not talking about the half an hour moves, but the way that we are holding 116.80, we are not making it down to 116, for instance, is still telling me that the market wants to believe in positives for the euro. So I'm leaning towards a positive for the euro, but I think a lot will be decided when they will start to talk about cars, because we know the big German manufacturers, they are, I trust, waiting for news, pretty anxious, because we've seen some declines in Volkswagen sales, etc. So that's going to be a biggie in the whole trade issue, a bit like with the Japanese, really.
Yeah. Although things do seem a bit more positive on the European front than the Japanese front at the moment, but yeah, we shall see. Right, I'm going to pass it over to you, mate.
116.80 is pretty cool as a level, because it's an easy stop now below. If it goes through 80, 75, stop, and then see if it gets down in the low 116s or even 115s. Because I think if there's something really fishy going on, the euro could get initial, at least, pretty big hit as well.
Yeah.
Okay, I'm not going to take too much time today, because it's really, we are at a virtual standstill in markets. I've seen Ali's position there in euro sterling. We're still pretty much where we left it yesterday at the time we spoke. Still looking a bit bull flaggy to me, but it's going nowhere right now. So it's just a standstill. We need to break whether it is 86, 85, 90 on the one side, and then 85, 35, 40, 45 on the top side to start moving again. And we're seeing it in a lot of currencies. Euro dollar is exactly the same. Sterling still, I would argue, a bit more fragile than euro, for instance. Yeah, your euro sterling is not coming down too much right now, because here we are going to need to get back above 136.25, 35 to get going topside again, and that's just going to take away the rather, I should say, fragile look for the cable right now. Looks a bit fragile, even though we did hold pretty well here around that 135.30. That's going to be the level to the downside. But for as long as we fail to get above 136.25, 35, I am not going to look at it with a too positive eye, this cable. Kiwi, you were asking. It still has to make its decision. Who was asking? Mike? Is it Mike? Pop, 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 pop. Who was asking? Yeah. It still has to make the decision. It's not that we're at the same point as yesterday, because we moved away from it a little bit after a lot of hesitation. 60, the figure, is still the hinge of this whole thing. They are doing better. Aussie as well as Kiwi are doing a bit better. But is it just because they didn't get a letter, or there's no talks about it, or is it because the market is slowly getting back into the groove of perhaps buying those who look a bit better on the trade side? For the time being, it's relatively that, but we are going to need a confirmation back above 60, 30, 40 to get going again. And this low here around 36, 37, the low here around 30, then another high around 34. You know, this thing, we really need to get through it, to push. Positive door, if we can say, is that we have the hold here, which stopped before the bigger support here. So in the more medium term, I would say, if you look at, I'm not saying the dollar bullish side, but actually, if you're dollar bullish, you need it to break below 59, 65, 70. If you're neutral or want to play the ranges, this is a good one as a support. I mean, to put your stops just below. That's how I would look at it for the time being. And really, gold, as I usually do, it held. Okay. And now we are back looking at the top side. You know, my levels here, 40, 45. That's we're still in that range now, waiting what's to happen next. I must say, I don't know who bought it, but with less direct adverse news for the bigger blocks, it again showed, as I call it, some decent elasticity to bounce back. It is still one that is doing pretty well, this gold, all in all. Okay, it's just noticing what's happening here. Short-termers will probably look at this line, saying that, oh yes, but trend line resistance, we got to be short here. Well, if you're short here, you know where your stop should be. That's if it stops around 40, 45 again, it can come down again. But if it goes through 40, 45, you're probably looking at 33 3/4 again in gold. I still find it interesting, fascinating that it can bounce relatively easily, and then at the same time the range is getting tighter and tighter and tighter. So we can expect somewhere a decision to be made in the upcoming days, if not 2 weeks from now. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good stuff as always. And yeah, that's it for today. Thank you, everybody, for coming to the Flow Show. And we'll catch you all a little bit later on Face. Otherwise, have a great day, and we will see you tomorrow.